we talk about this bar that's committed first time compared to the past. We have the decreasing of the volatility here from segment 1 to 2. We have this commitment bar that coming above the resistance level. Supply is relatively low on this side, suggesting that we will have a rally attempt. And indeed, the rally attempt going on for a few more days till on Thursday and Friday. This ruined the previous rally attempt, especially on Friday. Friday is where we have the bearish action click together with the slight increase of the supply level. The supply level is not that threatening like the change of character bar on 18th of December last year. Still, there is increasing of the supply locally. Most importantly, we have this bearish action. Compared to the past action, this is something that we haven't seen for quite some time within this box. In terms of the spreads, this bar on 27th of January is comparable or even slightly more. In terms of the magnitude to the downside, is only minus 1.4%. Compared to on Friday, 21st of February, that's minus 1.75%. That's certainly the resume of the volatility, the bearish price action in sync with the increasing of the supply, suggesting that we will have a pullback or a reversal is unfolding. That's an uptrust or a temporary commitment above this resistance level. We have a failure bar right here that comes with slight increase of the supply. Yesterday, we have a continuation of follow through to the downside. Initially, we have an attempt to rally. The momentum to the downside is so strong that it's likely to continue. Yesterday is a reflection for the continuation of the downside comes with consistent high supply level. If we want to anticipate where the demand will step in, that will be somewhere around here. That's the box where previously we have a demand come in, reflected in this demand tail. Also here, that's the demand tail. Right after the demand tail, we have a demand come into support and have a attempt rally. Here, attempt to rally within this area. Here is different. This bar comes with strong momentum compared to the past. Compared to this, that's first bar. And second bar here, that's a gap down bar. Bar 1, bar 2, and this few combo bar is 3 and beyond. Bar 1, we have a demand come in straight away. That's reflected in the demand tail. Bar 2, although we have a gap down situation, but demand tail show up, we have a close at a higher ground, and then a low close at high. There is strong demand come in. Third, here, this bar closed right at the low. Next day, there wasn't any reversal like 1 or 2. For bar 1, we have this bullish bar come in next. Bar 2, we have this gap up bar come in next. But here, bar 3, we have this follow through to the downside. That's different from 1 and 2. Suggests that the momentum is so strong that it's likely to continue to go down, at least to test the tail. 59.50 will be the minor support level. Here is a more meaningful support level because that's the swing low support level at about to 5,900 to about 58.50. The short-term bearish scenario that we could anticipate is continuation of flashing down to test the swing low level between 58.50 to 5,900. Somewhere around here will be the support zone. We should have the short-term market breadth, the percentage of the stocks above the 20-day MA hit the oversold zone. That's where we can expect a relief rally come in. Until then, the momentum is still strong and we could anticipate more pressure to come and to test the swing low level. Short term, the swing is likely to go down, and medium term, we're still stuck within this trading range. This is still the trading range that we have been discussing for at least a few weeks or even months already. We talk about We have a strong rally and then a change of character bar, and that set up the trading range right here. And last week, we also talked about we need to monitor whether we'll have excessive supply right at the top. Here we go. There is an increasing of the supply right at the top, selling at the top right here, and then break down, come back within this trading range. Long-term wise, we still have a high, low structures throughout. That's still a good rally, and then going into this trading range. Compared to reaction like this, or even here, this is a reaction that's relatively shallow. Reaction 1, reaction 2, that's reaction 3. 2 is the worst, and compared to the supply level, that comes with a lot of the supply and has been increasing throughout. First pullback comes with also quite consistent supply. Here, although supply is only this one change of character bar that's comparable to here, the rest of the supply is not that threatening yet. In terms of the magnitude to the downside, 3 is considered as very mild compared to 1 and 2. We need to be more patient, especially it's going into February to March, and usually these are the choppy seasonality, and start from April usually we'll see another trend get started. That's from the seasonality point of view. Based on the price action and the supply level, this is the current trading range, and compared to the past, that looks healthy. We need to be more patient and wait for the setups to emerge rather than force the setup, because the volatility is way too high and a lot of the breakout setup tend to fail. Not a good time to jump in and be aggressive. We could still try out some of the setups, which we'll discuss shortly. That's the trading range that S&P 500 is likely to be in. And short-term wise, the momentum is still strong. That is likely to go down to test the swing low support level. Long term, that's still up. Nothing has changed yet.